The money that investors have in the stock market is not leaving the stock market, it's being redirected in the stock market. The stock market took a big hit in the last week, the last month, over the last 3 months for really one reason, and that is that software is too expensive and too difficult to access when AI has made things easier. The Anthropic Claude systems are a leap forward. The next company's leap will be in another 3 weeks or something, or 4 weeks. That'll be even better than that. The point is that the pace of change is phenomenal. I don't think it's a bear market. I would tell you if I did, there is still very good profitability and revenue streams coming into corporate America, both large and small. Companies that are weak and not making money or are compromised because of changes in technology, they will be punished severely. Expect that. Make sure that you talk to your advisor or talk to us about portfolio allocation. We'll tell you where we are and where you should be, because there's going to be some changes for sure. But money's flowing into the country. The dollar has rallied the last couple of days. Even gold is coming down a little bit. Maybe that's partially the Lunar New Year celebrations in China. Who knows? Stock market is always a reflection of the economy, and the economy is doing pretty well. Profit margins at the S&P 500 will probably be at something like 13.2 or 13.3% this quarter, with about 75% of the firms invested, and the big cap megascalers have not all reported. NVIDIA is coming soon too. Point being is, the money that investors have in the stock market is not leaving the stock market, it's being redirected in the stock market. And that's an important concept. You have to understand that the Dow and the S&P are really within a couple of percentage points, 1 or 2, of their all-time highs. Nasdaq's a little bit weaker because there's more companies in there that don't make any money, and when they miss their earnings estimates, they're getting punished. The point is, the profitability is good because the economy is doing well. Consumer spending is 2/3 or maybe a little bit more of that of GDP, and it's growing, and the labor market's growing, and wages are going up. And artificial intelligence is going to change the job market. Is it going to destroy it like some people think? I don't believe that to be true. Industrial revolutions tend not to do that, but I know that there's a lot of fear and loathing about things like that. But the point is that the stock market's in pretty good shape. Money's coming into the market, not out. It's not a bear market. Find the right spots. Anyway, it's going to be an interesting year. I wrote a long piece. It's on the website, and it's also on LinkedIn, and you can find me. Just send my team a little note. But good luck. Call us with any questions, and stay the course on big cap tech and gaining of market share of the companies that manage the AI revolution the best. Good luck. Thanks. Bye.